What's up, everybody? Welcome back to another episode of the Creativ Rise Podcast. So glad you are here with us today. We're talking about write-offs, how to maximize them, what you need to be doing right now in order to actually end the year well. So this is an area of creative business that a lot of creatives never want to get into. They think it's really muddy, it's really gray. You got to be super smart to understand it. You got to go to school. You have to become an accountant to understand it. And that's just not true.
No.
So what we want to talk about today is how you can understand more about write-offs in order to maximize your write-offs before the end of the year, because once the end of the year happens,
that's the cutoff.
It happened.
Yep.
That's what a lot of creatives don't understand. Why don't we start there? Yeah. So one of the biggest problems with a lot of creatives, and this used to be me, this used to be you, is when you think about tax time, you think about tax season being like March to April. And while that is true,
it's like, oh, I don't have to worry about it until March or April.
I don't have to think about my taxes till March or April, till next spring. While that is true, that is when you pay your taxes. What you pay taxes on is contingent on what happens before December 31st every single year, which means we are in the final countdown for that. So at the time we are recording this episode, the time we are posting this episode, once this episode gets posted, there is 11 days until the end of the year, which is just insane.
Yeah, which means if you want to minimize your taxes for the calendar year of 2023, you have 11 days to make it happen.
To do something. Now, what does it mean to minimize your taxes? Well, quick little refresher on what taxes are. Taxes are the dues we owe the governments in Australia, Canada, the United States, wherever you are listening to this episode. It is the dues we owe the government in the country we live in based on the profit our businesses make. So that's an incredibly important statement. A lot of people think, you pay taxes based on the money you make. That's not true. You pay taxes based on the money you keep, not the money you make. So why does that matter? Why is that such an important statement? Well, the reality is there is a lot of things in your business that are qualified business expenses when you spend money on them. Example, computer, cameras, your phone bill that you run your business from, so many other things. We're going to talk about that later on in the show. There are so many different things that your business spends money on, reducing your profit, that if you are not expensing those properly, meaning you're not accounting for them, giving them to your accountant for them to submit when you file your taxes every year, if you are not accounting for those, you might be paying way too much in tax because you have qualified business deductions that you are not accounting for, or maybe you're not even taking them.
Yeah.
And that's why the 11 days is so important. You cannot pay for a business expense January 1st, 2024 and want it to count for this year of 2023. Right. It does not work that way. The second December 23rd hits, December 23rd at 11:59, when that hits PM, it's a done deal. The 2023 tax season is a done deal. There is nothing you can do to influence your taxes by spending more money on some type of business expense. Now, let's talk about this just for a second.
Well, I was going to say, maybe if you're someone who's like, I've been listening to the Creativ Rise podcast this last year, I've been really hustling with my business, and I'm super excited. I made a lot more in 2023 than I did profit in 2022, but your spending didn't really change from 2022. That is where I would have a little bit of a red flag for you of going, if you made a lot more money this year, but you did not spend more than you did when you're making less in 2022 than you did in 2023, that's when I would say this episode is definitely for you.
And red flag, just to clarify that, red flag doesn't mean that's a problem. That means you're running a profitable business, which is exactly what you want. The red flag is that you are going to get taxed a lot if you're not aware about it. So there's two different types of ways to go about this, and I'm just going to break this down really quickly. If you are a self-employed individual and you want to buy a home, okay, you need to show a lot of profit in your business, which means you need to not have a ton of business expenses because your profit has to be high. Therefore, your take-home income can be high so that you can qualify to buy something like a house, buy an asset like a house. No loan, no officer, no mortgage officer, whatever bank is ever going to give you a mortgage when you don't have any income. The other side of this is if you're not looking to do any of those things, you can actually spend a lot of money on your business for qualified business expenses, reduce your profit a ton by spending money on things that help you grow your business, make running a business more enjoyable, make your life more enjoyable, take down your personal expenses a ton because your business can cover a lot of your personal expenses, and you will pay way less in tax. However, you're not going to have much of an income to show if you ever wanted to go buy a house or something like that. So it's important to know there's kind of those two different roads. You either show a ton of profit and don't take a lot of deductions in your business, which means you pay a lot more in tax, but on paper, you had a bigger income, which means you are eligible to eventually down the road go and do something with that income, buy a house, buy some other type of investment, or you go the other way. Maybe you're like me for a long time. You know, I started a business as a teenager. I was like, I'm not buying a house anytime soon. So I would take every deduction possible to minimize my tax to as close to zero as I could possibly get it. Meaning I was trying to burn through as much profit as I could on business driving expenses. I wasn't spending money on stupid things. I was spending money on masterminds, coaching, travel, business travel that was going to get me more clients or really going to get the eye of clients I wanted to work with. I was spending money on buying products from clients that I wanted to work with, deducting that as an expense because it's being used for a shoot to get that client's attention. Therefore, I then, create that spec. Like, there's so many different ways to do it. I would run my profit as low as I could possibly go. But you got to figure it out. So a red flag, if you have a lot of profit, is only if you are not expecting to pay a tax bill.
Yes.
If you have a lot of profit, you got to expect to pay a tax bill. If you don't, you minimize it with expenses. You are going to be paying less in tax. So you only have, the time this podcast drops, 11 days to actually make those expenses count towards 2023. So here is a list of a bunch of expenses that are some of our favorites. These are not every expense. These are some of our favorite expenses you can take for your business as a photographer or filmmaker or as an agency owner in order to count against your income in 2023, reduce your taxes, and at the same time, ideally, build your business.
So if you want to minimize your taxes for 2023, these are some of our favorite expenses here at Creativ Rise. Your phone bill, your computer, your camera equipment, subscription services. So if you have like an editing software, a Lightroom, whatever it is, business-related travel, business-related meals, healthcare and medical expenses. Anything you spend on yourself medically, you can write off, which is incredible. A lot of people don't know about that one. Company cars, if you have a lease, if you have a car payment, whatever that is, write off. Plus the gas when it's related to business. Office space and utilities, even in your own home. You take the square footage of what you use for business. You can, again, your rent or your mortgage counted against your taxes, which is awesome. Office furniture and supplies. Contractors, aka models, second shooters, assistants, editors, whatever you pay those people, make sure you're writing it off. And then as well, one of our favorites, business education, books, mastermind, courses, retreats, whatever it is, if it's related to your business, you can write it off. So if you have a business purchase, you need to make it in the next 11 days if you are trying to minimize how much you are spending in taxes for 2023. Now, what does this not mean, Joey?
This does not mean go and make stupid spending. Like I just said earlier on in the episode, you should be spending money if you are already planning on, like, hey, I've been really wanting to invest in that course, the outreach templates by Creativ Rise or something. I've been really wanting to better my outreach. I've been thinking about it for a while. I know I've got some profit to burn. Why don't I just go spend the $100 and that's going to get deducted off my taxable income? Like, that is a good reason to go and spend the money based on what we were talking about. What is a dumb thing is, wow, I already have 4 Canon R5s. I could probably use a 4th because I want to reduce my taxes. Let me just go spend another couple $1,000s on something I don't actually need. It's not actually going to help my business, but I'll get the expense. Like, yeah, but here's the problem with that. I'm going to talk to you about why that is a problem. The reality is not all expenses are actually 100% deductible, and they're not. Some expenses are absolutely 100% deductible in the tax code of your country. So I'm going to speak for the IRS because we're here in the States. Look this up for your country. But it is important to know what category of expenses are deductible at what rate. So here's a great example. Business meals. When you and I go out and we meet with a client and we buy dinner, that is a business expense. However, it doesn't mean if we spend $60 on dinner that we get all $60 off our taxes, except if it was 2022. Because they did that in 2022, trying to help. COVID did that. They tried to help small businesses, so they made them 100% deductible. 2023, business meals are back down to the regular 50% deductible, meaning if we spend $60 on a qualified business meal, we only actually, if we expense it, get $30 off our taxable income. Now, that's a 50% example, a category that's 50%. There's some that are 100% deductible. Like equipment. If you have equipment, so we're right now in an office or we were shooting this on a camera, that's 100% deductible. The lighting was 100% deductible. This mic was 100% deductible off of our taxes. Now, again, these weren't stupid purchases. We needed these. So always make sure you're making a purchase you actually need. But these are examples of 100% deductible stuff. Other things like professional services. If you buy something, which is like consulting, you're learning, education, that's 100% deductible. There's lots of things like that, but you've got to figure it out. So a massive reason for not making stupid purchases is a lot of people go, oh, well, if I go and I buy this thing, for $5,000, it's going to take $5,000 off my taxes. It's like, no, that's not actually how that always works. Every different expense you buy is weighted in a category, meaning that meal you bought is weighted as a business meal. That's a category with the IRS, and each category has a certain percentage that they actually give you a deduction for. So It's important to think about those things. So this is why, again, you don't go off and just spend stupid money. Number one, you never want to spend money you don't have. Number two, you never want to spend money on purchases that you won't actually use to grow your business. You don't need a fifth Canon R5. Don't get it. Do only ever spend money on something you actually need that's going to grow your business. Don't make stupid purchases. Number three, reason why you don't make stupid purchases near the end of a tax season is because you don't actually get 100% deductions on every single thing you buy. It's only on certain categories you get 100%. Everything is deductible at some rate. You just got to figure out what rate those deductions are at. So we end this on a low note. Makes it sound like we don't want you to do any deductions, but this is still a very, very incredible thing that us as business owners get access to, that a lot of people, if you don't own a business, you don't get access to stuff like this, right?
Yeah.
So I really want to make sure that you are considering, I have 11 days left, and by the time you listen to this podcast, it could even be closer. It could be 5 days. It could be 2 days till the end of the year. Are there things that I have been needing to get that could help me burn some profit for 2023? And if so, I have to make that purchase before the end of 2023, before December 31st, 2023. If you can make that purchase then it is deductible for the 2023 tax year.
Yeah.
If not, you got to wait till the end of 2024 in order to receive that deduction off of your taxes. So this was a quick episode. This was hopefully a good episode, giving you a little bit of understanding of more on how taxes work and how you should be thinking about this stuff. But it is so important, guys, to understand where you are at each month with your profitability, with how much you're spending on expenses and all of that, and even just understanding what your goals are. Like I said, a lot of people, they burn a ton of the profit in their businesses because they have a ton of business expenses, and then they wonder why they can't buy a house because they don't have any income, right? Because on paper, they might have made $100,000, but they had $75,000 of expenses. They really only made $25,000, right? On paper. And then there's other people where they don't want to buy a house. They don't need to be showing a big income. And yet they're not taking advantage of all the expenses that their business should be taking advantage of. So they're paying way more in taxes than they should be. And they're not needing a super high income in order to show and to qualify for anything. So it's important to understand, what are your goals, your financial goals in the short-term future, the next 2 to 3 years. What are your goals? And then you need to swing your tax strategy. Really what I'm saying is you need to swing your profitability in order to favor those goals. Hope this episode helped you guys.
And one last tip, if you are someone who wants to do good with your business, charitable giving is also tax deductible.
Yeah.
So at the end of the year, if you're looking at your taxes, you're going, ooh, I really want to minimize something, but I also want to do something really awesome for somebody else. Consider doing a charitable gift to something, a donation to a registered 501c3. That would be awesome. That's something that we love to do. And we just love encouraging other people to do it as well. So again, hope this was helpful. Again, every single week we release episodes on the Creativ Rise podcast. And if you found this was helpful and you're like, hey, in the next 11 days, I would love for my friends to be able to hear about this, post it on your story, tag us at Creativ Rise. We'd love to repost you and just give you a big thanks. Again,
absolutely.
Hope you guys have an awesome holiday season. Take some time, rest, enjoy family, and we will see you right after Christmas for our next episode. See you next week, guys.